Hello traders, it's Melissa with Price Plan Profit. I'm going to do my daily trade recap today. Like yesterday, today I chose to day trade SPX. I'm going on vacation at the end of this week and don't want to focus on a lot of different names and not focusing on any swing trades. So just focusing on SPX for now. On my screen, this cyan box represents the PMZ or the pre-market zone, the only day trading indicator that I need on my charts. The concept is very simple. Price below the pre-market zone, trigger short, price above, trigger long. I'm trimming at the lines that you see above where price is at if I'm long or below where price is at if I'm short. Now today we had an opportunity up here at this brown or orange line. This is an upper daily edge. And that is also a place to look to go short for me if I get confirmation of lower highs and trendy turn signals. Down here is the lower daily edge. That is a place that I can look to go long with higher lows and trendy turn signals. The PMZ I've already explained, above it looking to go long and below it looking to go short. So let me go over my first trades today. I did not catch this move below the PMZ. It happened very fast right at the bell, and I was actually busy setting up the PMZ on this chart when that move happened. It came down into the first target being this lower daily edge, and then buyers stepped in, pushed price back up and into the PMZ. We got a quick pullback here. Then here is my first trade, and it was for a loss. On the retest of the bottom of the PMZ, I bought a put and was going to be in the trade as long as price stayed below the PMZ, and in particular below this daily edge mid. Sorry, but I was stopped out of this trade. So I took a quick loss because price closed up above my stop. I took the loss. Then on this pullback, I reversed the trade and I went long as price got above the PMZ there. This upper daily edge was my target where I exited the trade, and then I sat and wait to see if price was going to go on up into my sell zone, or was this upper daily edge going to be the point of resistance today. Once we made a lower high here and price got back down below the low or upper daily edge, that is where I went short with 2 contracts. I trimmed the first one at the PMZ. I placed a trail stop here at the lower daily edge right here, and I was trail stopped out of the last contract on a trailing stop, which means I missed this price action here. I did catch another opportunity to go short though, because once I was out of the PMZ trade and I had ran my Fibonacci's down of this move right here, as we came up into the 38.2 Fibonacci level, that was an level because price was below the PMZ. That was a level that I was looking to go short from, and I covered back here at the lows. So that was another great trade there. Then once price got into my buy zone looking for confirmation, I just never got a good risk to reward. My first opportunity came right here. Well, technically, no. My first opportunity came here. This was the low, then we made a higher low, but I pay attention to that third candle. Is it going to be a breakout candle or a breakdown candle? You can see that was a breakdown candle, so I did not go long from that higher low. My next opportunity came right here. We made a low, we made a higher low, and this candle did break out above the body of that higher low candle. I did not take the trade. Why? Because the risk to reward wasn't worth it. I had a 1.5 of reward. My stop would have been a candle below this low, and my risk was way higher than my reward, so I did not take that trade. Then I was still watching to see if we could create higher lows followed by a breakout candle that presented with a good risk to reward. I got an opportunity here when we made this low and then a higher low, but again, that third candle could not act as a breakout candle. My stop would have been here, a lower low, but again, the risk to reward would not have been great there. Although I would have probably taken this because it would have been a 1-for-1, but it could not break above the body of the higher low candle. So I did not take that trade. Once price fell below my buy zone right here, I removed this zone from my chart in the SPX room because it was just not valid any longer. So I removed this zone just like this, took these Fibonacci's levels off, and I then focused on the green zone that you see below, waiting for price to come into basically 6,400. It's 63.99 buy, 63.55. This zone is on a higher time frame. Um, it's a buy zone, a buy the dip opportunity, but it would be more for a swing trade. So buying out a couple of days, maybe the Friday expiration. And I'm not looking to have any swing trades on since I'm going out of town. So I'm not really going to play this green zone. But if I were, I would do a starter position at the top half of the zone and then add to full allocation at the bottom half. And a stop would be a candle close here below 63.55. But again, I'm not going to take this trade because I am going out of town on vacation. Now, the day has not ended yet. We still have about an hour left in the market. As far as what I would do or what potential trades I could take in this last hour of the market, if I run these Fibonacci's here, my first area to go short and play it for a target down there at that green zone would be here at 64, let's say 15 by 23. That would be my first short opportunity if the risk to reward is worth it. Now, how do I determine what my risk is? Well, it's about 8 points right here. This zone would be the total risk. Then, how would I figure my reward? If I get a rejection right here at 64.15, my reward would be about 15 points. The bottom of this cloud at that point would be support. And so that's about 9 points. So 8 points of risk, 9 to 15 points of reward would be a trade I would be willing to take here in the last hour of the market. The next zone that I would be interested in going short from would be 64.29 to 64.36. Again, I'm not sure if I will get trades from here, but if I do, you now understand why I would be going short because price is below the PMZ. My bias is to play the downside for today. And these zones represent areas that I would look to short, and the green zone or the buy zone would be my target. All right, I hope you found this useful. Until the next video, I look forward to talking to you then. If you're not a member of the Trendy Room or the SPX Room at Simpler Trading, where Trendy John and I trade our money live every day, I invite you to join us. There is a link to a 30-day trial for $7 in the description of this video. Until next time, have a great day.